Well, the short talk is this. I did a lot of math, I made a lot of money, and I gave almost all of it away. That's the story of my life. Now, it's a good story, but it's short. But for reasons which I won't go into, I needed money. And I had borrowed money to invest in a company with some friends of mine, and I needed to pay it back. But there was a place in Princeton called the Institute for Defense Analyses, which was a highly classified place under the aegis of the government, the Defense Department. And what we're supposed to do is break Russian codes. Well, that was an interesting challenge. I liked the work. They told us you could do your own mathematics up to half your time, but the other half you had to do, this code cracking business. At a certain point, I came to Stony Brook University. I was 30 years old, to be the chair of their math department, which was not a very strong department. And I was pretty young to be the chairman, but I thought it would be fun. And I had a lot of money to work with because the governor at the time was a guy named Rockefeller. Now, I think everyone has probably heard of the name Rockefeller, but has anyone not heard of the name Rockefeller? Okay, most of you have heard of Rockefeller. Rockefeller loved the State University and was pouring money on it, so I had a lot of money to work with, and hired some terrific people. But at the same time, in that time frame, I started to get interested in another area of math. And I worked on that area and came up with something really quite beautiful in 3 dimensions. It was a function, I can't really describe it, but it lived in 3 dimensions, closed 3-dimensional spaces. And I was quite pleased. I showed it to Chern. I showed it. I sent it by the mail, because in those days there was no email. And Chern said, well, you've done this in 3 dimensions, but it should work in all dimensions. I was very dubious, but I said, okay, let's work together and see. And he was right. It would work in all dimensions. And I was very pleased. We published the paper. And about 5 years later, a physicist named Witten saw this paper and thought, and he was right, it could apply to physics. And then some other physicists saw how it could apply to physics. I didn't know any physics at all. Chern might have known something, but it never occurred to him that it would apply to physics. And remarkably, so you never know where something will go. You think you're doing math and you're actually doing physics, or maybe, or whatever. So today, that is called Chern-Simons theory. It's all over the place in physics. On average, every day, 4 papers in physics reference this Chern-Simons theory. So I can't take any credit for it at all, but there it was, and of course, I'm quite pleased about it, but I can't say that, I invented this for physics. Well, shortly after that, I started to get interested in the world of investments. I had come into a very small amount of money, but it was enough to start investing. And one thing led to another. I started hiring people, and we made what was called a hedge fund, and it was remarkably successful. It's still going. I'm not with it anymore, but I made a tremendous amount of money from this hedge fund. Now, my lovely wife, Marilyn, said, let's give some of it away. So I said, okay, fine. So we gave some charity. And then she said, well, why don't we start a foundation? And okay, start a foundation. She started a foundation. I put money into it. The good thing about putting money into a foundation is you can give the money away. You get the tax advantage, but it doesn't have to be spent immediately. So you can put money into the foundation and say, well, we'll see what we want to do with it tomorrow or next year or whatever. But it grew and grew and grew. So today, we decided to focus on science with our foundation. Focus on science. 90% of it should be science. 60 of that should be basic science, and 30 of that could be translational science, and 10% could be education and outreach and things like that. So today, that foundation is extremely large, and so most of the money that I made was put into the foundation. So I'm not so rich as I was before, but rich enough. It was extremely interesting to model things and see them programmed up. God knows, not by me, but someone else could program them up and test out theories, models, would it work, would it not work. And at the same time, mathematics was going extremely well, and I did do the work there that subsequently got this Veblen Prize, solved kind of a major problem in geometry. And it was going swimmingly. It was a great experience. I was there. But then this was the time of the Vietnam War. And the president of this organization, two steps up from my local boss, a guy named Maxwell Taylor. Some of the people with gray hair in the room might remember General Maxwell Taylor. Anyway, he ran this outfit, and he wrote a crazy article. Well, I thought it was crazy, in the New York Times magazine section, saying how we were going to win the Vietnam War, and it was just, victory was days away, or whatever it was that he was touting. And I didn't agree with that. Now, the work we were doing had nothing to do with the Vietnam War, but it annoyed me that the head of my organization could take such a silly point of view, and I wrote a nice letter to the New York Times expressing that view, which they kindly published in the same Sunday edition several weeks later. So now I was on the watch list. I didn't know it, but I was on the watch list for this place. And then a guy came along a few months later, 3 or 4, and he announced that he was a reporter for Newsweek magazine, and he was doing an article on people who worked for the Defense Department but were opposed to the war. And he was having a hard time finding anyone to interview, but he heard about me, he read my letter, could he interview me? And I said, sure. What did I know? Of course you can interview me. Of course. You could see how sophisticated I was at that time. So he said, well, what do you do? Well, I blathered on about this and that, but I said, but my algorithm has been, since they say you can do 50% of your work on mathematics and the other 50% on their work, Right now I'm doing only mathematics, but I'm keeping careful records, and when the war is over, then I'll do an equal amount of their work. And that's my approach. So, no, I mean, you know, it's not unreasonable. So I went back to tell my local boss. It was the first intelligent thing that had occurred to me, a little late perhaps, but that I decided I better tell my local boss that I gave this interview. And he said, "You did? And what did you say?" And I said, "Well, I said what I said." He said, He said, "I better call Taylor." I picked up the phone, called this General Maxwell Taylor. There was a little silence at the other end, and so on, and I couldn't hear what Taylor was saying, and then he hung up. He looked at me and said, "You're fired." I said, "I'm fired? I mean, I'm fired." He said, "You're fired." And, well, it was the first time, and happily the last time I was ever fired, but I was fired summarily. And I said, "Well, I'm a permanent member." That was my title, permanent member. He said, "I'll tell you the difference." And when I started, I was a temporary member. I was a temporary member, and then I became a permanent member. So he said, "I'll tell you the difference between a temporary member and a permanent member." I said, "Yes." He says, "A temporary member has a contract." Well, I guess it was true. I had a letter when I was a temporary member, but when I became a permanent member, I didn't have a contract. And so there I was, out on my ear, but not especially worried. And I did go against Iz's advice, and I did take the job as chairman at Stony Brook. I figured it was better to be a firer than a firee. And there was a fair amount of firing, regrettably, that had to be done. The department was very weak, but we hired a lot of people. We had a good time, and we did build a good department, and I did do some mathematics there that ended up, with Chern, that ended up being pretty useful in physics. And it was there that I did learn about the Bohm-Aronoff experiment and the apparent relation between what we mathematicians called, bundles with connection, and what the physicists called gauge theory. And I did run off to MIT and not to MIT, to see I think he was at Rockefeller that year, and sat in some place over coffee and explained this connection. And it was a very, very exciting time. And it was, I think there were conversations like that going on, perhaps in lots of coffee shops around, about how physics, the way it was evolving, and the geometric side of mathematics were really becoming quite intertwined, and now they're inextricably intertwined as far as I can see. So those were all good times. But then, as is said, as he's been giving my talk, I did get frustrated. I was stuck. I was really stuck on a problem. I was trying to prove a certain number was irrational. I guess you all know what an irrational number is. It might not seem so important that a number be rational or irrational, but in this case, it seemed to have a lot of implications. And I was wholly incapable of solving this problem. And it's still an open problem, this whole area. It's a great set of problems about volumes and whether they're rational in some sense. So anyway, I was very frustrated. I was on the wrong side of a divorce. I was turned out on the right side of my next marriage. I did have a new girlfriend who's sitting right there, my new girlfriend. And my South American business, at long last, started paying some dividends. In fact, it started paying a lot of dividends, and I had some money. And I invested that money and found out that I wasn't bad at it. And all of this made me think, okay, it's time for a change. And so in 1976, I was 38. I felt I'd been a mathematician all my life, but really sort of since I was 18, I think I was. So I guess I spent 20 years in that game and decided to go into business. And never occurring that I would apply mathematics to the business. I did subsequently, but I just felt, you know, you read the newspapers, you think you'll do pretty well. But, and we did okay. But after a little bit, I started collecting some data, and I figured there's something to be modeled here. There's something to be modeled here like we used to do in the old IDA days. So I brought in the best modeler in the world, Lenny, a guy named Lenny Baum from IDA, and persuaded him to come, and we're going to make these models and do great. And Lenny started making models with me, and we were fooling around. But I kept trading, and Lenny seemed to get less and less interested in models and more interested in reading the news reel. In those days, it was just a roll. It would tick away, and you'd read the news. And Lenny was always reading the news instead of thinking about models. And then he started having opinions on what was going to go up and what was going to go down. This was all foreign currencies, bonds, that kind of stuff. And I started listening to him, and he was right. He was right. He was right enough times. I said, okay, the hell with the modeling. Let's just let's just try to make some money. And we had a remarkable run. In 2 years since I said the hell with the modeling, we multiplied our investors' money by 12. Now, that was even after their fees. That sounds pretty good, right? We were incredibly lucky. See, the last word up there is luck. Luck. Good luck. Good luck. And we certainly had good luck. Had a lot of good luck in my career. So, but in the back of my mind was, well, okay, Lenny doesn't want to build models, but maybe we could build someone else could come in and build models. And another fellow, Jim Axe, who was quite a famous mathematician, left Stony Brook to come, and he did build some models. So those next years was a combination of fundamental trading. I did venture capital. I invested in all kinds of things. But the models kept being built and working better and better. And finally, at the end of about a 10-year run, it was clear to me that this gut-wrenching business of fundamental, I mean, you know, if you're doing fundamental trading, one morning you come in, you feel like a genius. You know, your positions are all your way, and you think, God, I'm really smart. And look at all the money I made overnight. And then the next day you come in and they've gone against you, and you feel like an idiot. We were pretty good at it, but it just didn't seem to be a way to live your life, you know. So building models, go with the model. So by 1988, I decided it's going to be 100% models. And it has been ever since in the business that we built. So some firms, you know, investing firms say, oh, they have models. And what they typically mean is, you know, we have a model and it advises the trader what to do, and if he likes the advice, he'll take it, and if he doesn't like the advice, he won't take it. Well, you can't, that's not science. You can't simulate how you would do. How were you feeling when you got out of bed, you know, 13 years ago when you're looking at historical simulations? Did you like what the model said, or didn't you like what the model said? It's a hard thing to back test. So if you're going to trade using models, you just slavishly use the models. You do whatever the hell it says, no matter how smart or dumb you might think it is at that moment. And that turned out to be a wonderful decision. So we built a business 100% based on building computer models, starting in those areas that I mentioned, currencies, financial instruments, gradually moving to stocks, and finally to anything that moved. Well, it had to be tradable, it had to be liquid. Was always liquid. And you know, bringing in data. In those days, we sent gals down to the New York Federal Reserve to copy histories of interest rate numbers. I mean, they didn't exist in the 70s. You couldn't go and buy data, and there was certainly not online deliveries of all this stuff. So to build the original models, we needed to collect a lot of data by hand, which we did. And but gradually, you know, we got smarter, the models got better, we brought in more and more people. Is said we have the best math and physics department in the world at Renaissance. I don't think that's quite true. On the other hand, it ain't bad. We have a lot of smart guys, and we certainly hired people who were good at that kind of work. So we started this thing called the Medallion Fund in 1988. In 1993, we closed it to any new investment by outsiders. Just employees could invest. By 2002, we started taking out the outsiders altogether, buying them out, and by 2005, there weren't any left. So since then, the last 5 years, this vaunted Medallion Fund has been owned 100% by the employees, which today are about 300 employees. And, well, so people would always ask me, well, what's the secret? How come? Because we're not the only quant firm in the world. We're not the only guys who have, you know, made models. I disparage some who model making was sort of a part-time thing, but there were certainly other outfits. But we seem to have done better than anybody. We had really established a remarkable record. So people always ask me, well, what's the secret? You know, what are the secrets? Now, of course, I'm not going to tell you the various predictive signals and so on and so forth, unless, no, I'm definitely not going to. We'll keep that. That's even bigger secrets than that, their stuff down there at IDA. These secrets we try to guard them. But the real secret sauce is that we start with great scientists. We start with first-class people who've done first-class work, or we have reason to believe will do first-class work. And because I was there at the beginning and a few other people who had been pretty good at math and science, we had good taste, and that's stayed with the company. The second thing is we provide people with a great infrastructure. And I've had people come to us from all over when they come to work and say they never saw. It's more easy to get to work here than any place else. The data is easily served. We have we have an alumnus here that I saw earlier who could testify to that. I'm not going to ask him to do so, but he would. So the infrastructure, give people a good infrastructure. And I think the most important thing that we do is have an open atmosphere. So my belief is the best way to conduct research on a broad scale is to make sure, as much as possible, that everybody knows what everybody else is doing, at least as quickly as possible. Sometimes you get an idea, you want to keep it to yourself for a little while, you don't want to look like an idiot, but the sooner the better. Start talking to other people about what you're doing, because that's what will stimulate things the fastest. No compartmentization. No, we don't have any little groups that say, this is our system and we developed it and you run it and we get paid based on that and so on. None of that. Everybody meets once a week. All the researchers meet. Any new idea gets brought up, discussed, vetted, and hopefully put into production. So it's an open atmosphere, and people get paid based on the overall profits. You don't get paid just on your work. You get paid based on the profits of the firm, so everyone has an interest in really everyone else's success. Okay, so why don't we have enough, I don't want to dwell on this point, but why don't we have enough teachers of math and science in the high schools who know the subject? And one answer is, well, if they knew the subject well, they'd also know enough to work for Google or Goldman Sachs or God knows where, because today the world is so much more quantified and the economy is so much more based on quantitative methods than it was 30 or 40 years ago. So the difference in the quality of the job, the pay and the respect is so great for someone who's actually qualified to do a good job at teaching high school mathematics that they get pulled away and don't often find themselves in the classroom anymore. So you have to make the job better. That means pay these folks more, which we do in New York through our program and a few other cities, and provide them more respect and support, which we do. So, you know, if you pay a guy 25% more and make him feel, or her feel special, all of a sudden the career is a lot better. If you make the career better, people will stay in the career. If it stays the way it is, people won't stay in the career. And if we don't do something, it isn't going to be a good situation.
Because as far as I can tell, and unlike most of the interviews with you, which I assume are largely about your incredible success as a quant, but is that one of the reasons you were so successful, it seems to me, if I try and distill this, is being able to bring in really talented people and let them run and with their talent.
Yes, and let them run. You have to have good taste in selecting people, and but then you don't sit on them. You let them do their thing, and that's very satisfying. And again, when I went into business, that was even more important, in a certain sense. And I hired some terrific people there and let them, as you say, do your thing.
But do you think your experience as chair helped prime you for that or not? I mean, the sense of hiring faculty and saying, okay, we think you're good, now do good things.
It did. I mean, I learned how to manage people.
Which is very difficult, and something you don't learn as an academic as a rule. Right.
And so I left Stony Brook, I think, after 8 years. And that's when I went into business. And but I had learned to manage people, and I was good at that.
Well, recognizing talent and encouraging them to do the best thing is great at managing people. If you can do, if that's what you can. I mean, sometimes, unfortunately, there's the minutia of other things that get in the way, but that's the heart of a good. Yeah, it obviously worked for you. Fortunately, you actually were able to build. Look, let me put this. Well, there's, as far as I can tell. Again, I've tried to think about your life, having been studying it lately. 3 factors probably are important, but one I learned. One was that you had sold this company that had started way back when in Colombia, and so you had a cushion. You had a monetary cushion. You weren't quitting your job in some sense with worrying about feeding the family.
I did, and in fact, that business was sold. And for quite a lot of money. And my friends said from Colombia, okay, now we have all this money. We want you to help invest it. I didn't know anything about investing, but I said, okay, I'll do that. And I found a guy, a mathematician, who had gone into the commodities business. Mm-hmm. And I went and talked to him to see what he was doing. And he seemed to really know what he was doing. So I said, okay, we're going to give you X dollars. You can have 10% of the profits. And we want you to make some money for us. And I said, but if you lose too much, you have to stop. And he said, what's too much? I said, well, if you're down 30%, you have to stop. But as I was walking out the door, I said, and if you make a tremendous amount of money, you have to stop. And he said, how much is that? I said, if you multiply the fund by a factor of 10 after your fees, then you have to stop.
Wow.
And well, he couldn't argue with that.
Yeah.
But the remarkable thing was that after a few steps that he took that didn't work, he got into something and made a fortune. In 9 months later, he had multiplied our money by a factor of 10.
Wow.
And much of that was in a Bermuda trust that had been set up for me by the father-in-law of one of the two boys, because he was very appreciative that I'd gotten this business going in the first place. And he owned half the business, and he took $100,000 and put it in a Bermuda trust for my family.
Oh.
And so that $100,000 was invested with Charlie, and that became $1 million.
Oh.
So now I'm ready to go. So I don't know how we get into that, but
no. Well, the fact that we got into it by saying I knew you'd had a cushion financially, which makes it a little easier to switch to quit academia, I think, obviously. Yeah. But the other thing was that you had, so that was certainly a help. There's no doubt about it. And it might have been a harder decision if you were going paycheck to paycheck. But also you also had a cushion of intellectual excellence. You were able to build on the investment you'd made in humanity. As far as I can see, you brought in, let's see, someone you knew, a very important person from the Institute of Defense Analysis, who'd been involved in creating a very important algorithm which led to speech recognition, right? Baum is his name or something, yeah, and then also Axe, your great hire from yes. So you were able to say, oh, I've got these really good people. I already know they're really good, and I can bring them in. That must have been important.
It was important, and at a certain, we were doing fundamental trading initially, and that worked out okay. Wait a minute. I should go.
Well, we had 10 minutes left.
Longer?
10 minutes or so? Is it?
Yeah, 10 or 15 minutes. Yeah. Yeah, maybe 15 minutes.
Thank you.
I don't know where I was.
Oh,
anyway, it was fundamental trading, but finally we get into making models, and they worked better. And it was ever since it was model making,
and your experience in algorithms. Well, obviously algorithms became very important, as did machine learning. I mean, which were you directly exposed to machine learning, or is that something that you were brought in by your colleagues?
Machine learning didn't exist in those days as a notion. I think machine learning has only been around for about 10 years. Or 15 years. No, we didn't do machine learning.
But the idea of in some sense, looking at having a vast storehouse of data that you could analyze and look for patterns.
Yes.
What became a central feature, obviously, of what. That's
what we did. We had a tremendous amount of data, historical data. Tick data even, the tick, we had a ton of that. And the way it worked is a guy would think, oh, well, maybe this would be a predictive signal, and he'd cook up something. And then we could test it, back test it for the previous 10 years to see does this really work? And if it was statistically significant, it would go into the business. So that's the way it worked, and it probably still works that way.
It still works that way. It's called black box, right? But and I'm intrigued by that because in some sense, I've done a lot of discussions with people in the past and written about AI, but the idea that basically patterns can be discerned that you might not discern yourself, but by looking at data enough, and that's how Tesla can look and find, in principle, hopefully that someone's not a pedestrian but a stoplight. Is that a black box can come up with saying this is what you should do, but it never tells you why you should do it.
Absolutely.
And it's frustrating for people, and I understand early on it was a natural tendency for you guys not to believe it, to say, look, we have an intuition. Why should we trust this machine telling us to do X when there's no rational reason that we can think of doing it.
I didn't worry about that. I
You
didn't.
didn't.
If it worked, it worked. And but we had very strong conditions.
Mm. Requirements.
Yeah, the what do you call it?
The signal versus the noise, I guess.
Predictive signals, predictive signals, and they had to have enough statistical significance to put them into the system. And they're tested all the time. Sometimes the signal disappears after a while, so you take it out of the system. What's happened is that as the markets have become electronic and computers have been applied to generating prices and accepting trades and all the rest, the markets have grown tremendously more liquid. Spreads have come down. The bid-ask spreads have come down. The fellows who used to be, the specialists on the floor, specialists of old, they were supposed to be the market makers, Well, they were full of baloney, and they would create very wide spreads. And at the first sign of trouble, they would disappear. With the electronic trading has come the ability to trade fast, and that has brought spreads down, and it has brought market impact down. So there's two things that happens when you buy a stock. One thing, you pay a little, typically, you will pay a little bit above the mid-price, just as if you sell it, you'll sell it for a little bit below the mid-price. But the other thing that happens is, infinitesimally perhaps, you move the market. Well, if you buy 100 shares, you're probably not going to move the market. But if you buy 100,000 shares, you probably are going to move the market. Well, how much are you going to move it? Well, if you're the only buyer out there, you're going to move it a heck of a lot. But if there's a lot of buyers and if there aren't any sellers, but if there's a lot of people active in that market, 100,000 shares might go very easily. So the more volume, the better. And it's volume that's been created by these high-frequency traders. So I think the research shows that the costs of trading, spreads, and market impact have come down a great deal, and it's all due to high-frequency traders. So, is it socially useful? Well, if you think highly liquid markets are socially useful, then I think so. Will there ever be glitches? There could be. There was a glitch. I think they called it the flash crash of a few months ago, and for 8 minutes or so, some market took a dive, but it came right back. It came right back. No, but it's an important point. In 1987, when the stock market crashed, it went down 25% in half a day, and it didn't recover for 6 months. Because there was nobody there on the other side. This thing recovered, this flash crash recovered, because someone had made a mistake, I presume. Some kind of order went in that was much too big. There was nervousness in the market. It was already down 3%. And it took a dive. And everyone stood back and said, oh, my God, what's going on? Well, but then the algorithms kicked in, and all this trading just came back, and this thing disappeared in 10 minutes. So it was a little destabilizing, but it was a whole lot different from the crash of 1987. So that's a long answer to a short question. Yes, I think high-speed trading is socially useful, and I think that the people who argue against it are wrong. Not only in the United States, but in the world, looks kind of unbalanced, unsettled. There's big debts being built up by countries, and we have obviously a recession in the United States, and we're busy bailing out banks, and where's it all going? Where's it all going? Going to hell in a handbasket, or what? And what should we be looking at? Well, I think all the things you mentioned are worth looking at. The national debt, as a fraction of GNP, was considerably higher even than it is today, right after the Second World War. And we never paid off that debt. What we did was grow the GDP. So the denominator got bigger and bigger, and after a while, we were back in the box. So there's nothing better under most circumstances, in my opinion, than some good growth. And I don't think we're taking steps in the United States to promote that good growth, because I think we should be maybe even printing more money and building infrastructure and doing some things that the country is lagging in, which would get some more people back to work and would put us in a better position to compete, even if we do have some inflation. It's not the worst thing in the world, is inflation. But, so I don't think there's any, what happened in this collapse is the United States got a lot poorer. And it got a lot poorer because the value of everybody's house went down. And most of people's net worth was associated to their home. And they had been borrowing against the rising prices in their home, home equity loans. That had fueled a lot of growth. And that came to an end. So we had two bad things happen. People's balance sheets were decimated. And they had to, not only couldn't they borrow anymore, but they had to be paying back debt. And a balance sheet disaster is not something that's going to get fixed very fast. It's going to take a number of years, I think, to rebuild from this base. And is the government doing the right thing or the wrong thing? I mean, I'm not a big fan of this government. I'm not a big fan of a tax bill that just passed, except that it was, well, there's a clapper up there. No, there's one clapper. I mean, obviously it made no sense to continue the tax cut for rich guys like me. That made no sense whatsoever. And for some of you out here, probably it didn't make much sense. But if that was the price to pay, as it apparently was, because we have a rather timid president, if that was the price to pay for extending the unemployment and making some other, and keeping the tax cuts for less affluent people, and one thing or another, it wasn't the worst thing in the world. So it looks like maybe it'll produce a little extra growth. But that's what we need. We do need growth. And my own view is I'd rather have it at the risk of inflation than have no growth and say we've held the value of our dollar. Who cares if everyone's out of work? You got 20% unemployment. Got a wonderful dollar is not going to be so helpful. Okay. Financial meltdown was based on mortgages being created that were no damn good. And they were created because there was a market for them. So these subprime mortgages, you lend money to people that you would never, if you were the lender, you would never dream of lending money under these circumstances. On the other hand, if your uncle said, don't worry, you lend it and I'll buy the paper, you might say, well, okay, uncle, if you say you'll buy the paper, I'll lend the money. You lend the money, buy the paper, sell the paper to the uncle. This paper got securitized, and at the end of the day, stamped AAA. Now, who the hell did that? The rating agencies stamped this paper AAA, and they stamped it AAA either because they were idiots, which I think is largely the case, but also because their fees were paid by the issuers of this rotten paper, who wouldn't have issued it in the first place if they didn't expect to get AAA, and then this whole chain. I mean, in the old days, you would go to the bank, really old days, you go to the bank, you want to buy a house, the bank actually was the one who lent you this money. The bank was going to hold the mortgage, the bank was going to service the mortgage, and the bank wanted you to pay. So the banks were, but now a bank loans you the money for a microsecond, and they sell it to the next guy. So it had very little to do with quant models. It's true that quants were designing these packages of mortgages, but the underlying statistics, what's the probability that this mortgage is going to get paid? Or what's the probability that a guy who's had 7 jobs in 8 years in 4 different cities and who has simply stated that he earns, whatever, what's the probability that he's really going to pay off his mortgage? Anyone with common sense, see common sense is up there, would think it's pretty darn close to 0. But that fact was not taken into account in the underlying statistics. So that's enough. That's a long answer. We'll do one more, I think.
Lucky me. When creating models to trade the markets, would you recommend focusing on creating models around fundamental economic data or on price behavior such as the S&P 500 or oil, gold, or combination of both? Thank you.
I mentioned Warren Ambrose in my beginning of my talk, this mathematician who inspired me. I'm actually going to answer your question. And I went to him one day early in my career and I said, Professor Ambrose, I mean really early, is it best to learn a lot about one area of mathematics or learn a little bit about a lot of areas in mathematics? And he looked at me and he said, one can make the cliche either way. And that was the end of the discussion. So there isn't any right answer to the question you asked. All of those things are good. It's good to use economic models. It's good to use, price histories. It's good to make models using all these things. And there isn't any right or wrong to that answer. So I think I'm imaginative. I think I have a lot of imagination. And I've had my share of good ideas, some bad ones sometimes, of course. In fact, when you're doing science, you probably have 5 bad ideas for every good one. But my friend Lenny Baum said, he said, bad ideas is good. Good ideas is better. No ideas is terrible. And when you're doing science, you have a lot of bad ideas, but but you get some good ones if you're a good scientist, and those carry the day. My idea of leadership of an organization is to hire the very best people you possibly can, and I have a good taste in people, and then let them carry the ball. And when I became chair of the Stony Brook Math Department, I reached out for the best person I could possibly find. And he was your father. And I knew if your dad would come on board, it would open up the floodgates of people saying, oh, well, this department can really go somewhere. So I spent a lot of time courting your father. And finally, he said yes. And then I was able to quickly hire 3 or 4 other outstanding people. And we did that over the next couple of years. I only really have one hero in my life, and it's Abraham Lincoln. There's many people I admire and so on, but as a hero, it's Abraham Lincoln. And he had the following qualities. He had very, very good social skills. People liked to be around him. He told a lot of jokes and so on. He was very smart. He was very smart. In his before he became president, he decided to study Euclidean geometry and understand that much mathematics, just on his own, because he was just curious. And he was a very, very smart guy. Good social skills, wonderful social skills, and determination. He had determination. There were so many times during the Civil War where he could have just said, "The hell with it. Let's just have 2 countries. So many people are being killed in this terrible war." But he had a vision of America. And he stuck to that vision and just wouldn't give up. And over time, he was right. And that held the country together. We won the Civil War. I say we won the Civil War. The North, right. The North won the Civil War. And then he got, with great effort, the amendment passed, which abolished slavery in the United States.
Yes.
And that was very difficult to get passed, but he knew he had to get it passed before the war was over. And there were a lot of Southerners now back in the Congress, and it wouldn't get passed. And he said to his guys, he said, "This is very important. I want you to go out and do everything you can, twist every arm, give people this or that if they feel they need it. I'm the president of the United States. I'm imbued with great power. Use that power and get this amendment passed." And it worked.
Yeah.
So I think he was just a great man in every respect. Euclid. What he said was self-evident were the axioms. The parallelism axiom, that was the toughest one. 2 points to describe a unique line, and the intersection principle. So those, he said, were self-evident. But from then on, the theorems that developed from these were not self-evident. They were all, well, some of them looked obvious, but nonetheless, they were all proved using these initial, quote-unquote, self-evident things. Mm-hmm. Now, this discovery of Zeno's paradox was when I was a little boy, maybe 3 or 4. I was riding in the car with my father, and he said he had to stop to get gas. I said, "Well, why? Why do you do that?" He said, "I don't want to run out of gas because, the car won't run." And I said, "Well, why don't you just use half the amount that's in the tank, and then use half of that, and then use half of that, etc., and you'll never run out. You'll never run out of gas." Now, I didn't think it further through and realize, yes, but you'll never get anywhere either.
Do you think of math as beautiful in the sense that art is beautiful? I mean, we often hear this debate, is mathematics discovered or invented? I don't think people would say Michelangelo discovered, the David inside of a block of marble, even though he would say stuff like that. But he actually created it. But mathematics and what's chiseled into your wall in the Simons Center, do you feel that that's, discovered, or really is it invented by the human mind? And then the follow-up question after you answer that will be, is it beautiful? Does it rank alongside great music, great artwork? And if so, why? So first, is mathematics discovered or invented the way art or inventions are found?
Yeah, that's a standard question.
Yeah.
And it's both.
How so?
Every true theorem is out there. The number of true theorems is, I believe, infinite. And the number of definitions that one can make is infinite. So all these things are out there. But on the other hand, you don't know this. There's no book of all these things because there's an infinite number of possible theorems and definitions. The key is, in doing mathematics, to, let's say, find a good definition, a definition that will get you somewhere, a definition that would unify perhaps other things, and so on. So that's a creative act. So it's a creative act to find something interesting in an infinite field and in an infinite collection of things. So it's out there, but you have to find it and have good taste in finding something that will really go somewhere.
So our segue between geometry and finance will be none other than Albert Einstein, who once said that compound interest is the most powerful force in the universe. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Do you agree with that?
I never heard that.
You never heard that? Okay, I'll send you an email with the quote. Yeah. So once again, compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. What is your notion of what's the most powerful force in the world according to Chern-Simons?
Well, the most powerful force in the world, according to me, is some physical force. I don't know which one to pick, but this, of course, is finance and not physics. So, I've been pretty successful in finance.
Yeah, you've had some success, I would say. Yeah,
I've had some success. Today, actually, I lost some money.
Oh no.
Not a huge thing, but
I'm here for you, Jim. If you need anything. Wants to know the proprietary algorithms of the medallion. No, he wants to know: has it become harder for you, given the rise in quantitative hedge funds, quant funds, and the thousands of PhDs trying to create new algorithms? Has that made it harder to create alpha? So, can you say what alpha means in the context of hedge funds for people that aren't familiar, and then answer that particular question?
Well, when you say alpha, first you have to understand beta. And beta is the stock market as a whole. Let's say the S&P average. So you could just invest in that, and you would be 100% beta. All your return would come from let's say the S&P, the Standard & Poor's average. Alpha is a source of earnings that is orthogonal to that. It's orthogonal to that. And so that's alpha. Now, our Medallion Fund is, I think, 90% alpha or 95% alpha. It really doesn't matter where the stock market is going for the Medallion Fund. We have now the Medallion Fund is only open to employees of the company, of Renaissance, and me, of course, as the founder and shareholder. And we have some publicly available funds which do have some beta. They're not 100% alpha, but of course they don't do as well as Medallion, but they do quite well until today. Today they had a bad day.
No. I'm sorry. Again, I'm always here if you need a cup of sugar. I'm here,
okay.
Jim.
All right.
So in that space, the question is, I've heard it described that these supercomputers and computers in general are, of course, increasing exponentially. Example of computing power over time, and cost is coming down. And yet the supercomputers themselves are suffering from the fact that there's more subscriptions. There's more people that want to use the computer now than in the earlier days. So it's sort of offsetting the exponential gains in processing power. And I guess James Altucher's question here is, has just the net quantity of hedge funds and quant PhDs?
Yes, I understand. And I didn't answer that question.
Yeah.
So I think the question is, do we have competition, and how much competition? Has competition hurt us at all? Because there are more and more quantitative funds. Up to a point, I think most funds are not quantitative funds, but there's certainly an increasing number of funds that are quantitative. And our secret is just to stay ahead of everybody, to hire the best possible people. And the research goes on all the time. or doing research trying to find new predictive signals. New predictive signals, for example, that's a big example. So a signal is, well, you know what a signal is. It tells you what's a predictive signal is a signal that tells you what's gonna happen.
With some probability of, right.
With a greater than probability greater than a half. And the more of these signals that you have, and independent, they're not correlated with each other. If they're highly correlated, it's really just one signal. But the more you have, the better. And we have, I won't even say the number, and I'm not sure what it is, but it's a very large number of predictive signals. And they keep being developed. And sometimes these signals lose their power.
Yes.
And you have to discard them. Other people have caught on or whatever. In the earliest days of my trading, I traded commodities. And commodities had a tendency to trend, a pretty strong tendency to trend. So that was a good way to make money. You would just say, well, if it was up last week, it's likely to be up next week, or so on. But people gradually caught on to trending. So after several years, or maybe 10 years after I started in the business, the trending in commodities had completely disappeared. The stocks never trended particularly, so there was no real trending in stocks, but commodities there was. And so that's an example of a signal that just disappeared.
So that's,
and so other people, we keep discovering new signals. Other people might find some of those as well, and that might the effect of that might be that the signal kind of goes away because too many people are using it. But so we have awfully smart people, and they keep coming up with new signals. So and we've stayed ahead.
Yeah.
So one thing I've always done is do something new. I love to do something new, and I don't like to run with the pack. For one thing, I'm not such a fast runner. So, if you want to end people all working on the same problem in different places, me, I know I'd be last. I'm not going to win that race. But if you can think of a new problem or a new way of doing something that other people aren't all working on at the same time, maybe that'll give you a chance. So, do something new. Second, collaborate with the best people you possibly can. When you see a person, get to know a person who seems like a great guy or a great gal to work with in something, try to find a way to do it, because that gives you some reach and some scope, and it's also fun to work with terrific people. I wrote down here, be guided by beauty. I really mean that. I think pretty much everything I've done has had an aesthetic component, at least to me. Now you might think, well, building a company that's trading bonds, what's so aesthetic about that? But what's aesthetic about it is doing it right. Doing it right, getting the right kind of people and approaching the problem and doing it right. And if you feel that you're the first one to do it right, and I think we were, that's a terrific feeling, and it's a beautiful thing to do something right. It's also a beautiful thing to solve a math problem or create some mathematics that people hadn't thought of before. So be guided by beauty is not such a bad principle. And then I wrote down, don't give up. At least try not to give up. And sometimes it's appropriate to be at something, to be trying to do something for a hell of a long time. And finally, hope for some good luck. So that's it.